Hey, everybody. It is Chuck Barone on Tuesday, June the 25th, 2024. Happy Tuesday to everybody. Welcome to the show. Before I get started doing anything, I want to thank everybody for being here. Nice to see all my friends in the chat, rocking and rolling as always. Nice to have you here, Paradiddle, all the way from Australia. Way to go. Great day today. A lot of interesting stuff to talk about today. Um, Even though the news always is freaking terrible, it's just so. I can't wait till the times when I can say, man, time to go all in on stocks. The economy's booming, man. This is good. It's going great for friggin' working people. I can't wait till that's what I get to say. It's just not today. Anyway, before I get started, check this out, guys. I was going through my desk, cleaning some stuff up, and I found this old relic. Can you see it? My old business card from back in the day at Lehman Brothers. It's quite a collectible, man. That was in 1989 to 1991. So that is quite some time ago. Anyway, no, that was a different place. That was at the mortgage company in 2000 and change. Anyway, a lot of interesting stuff today. Do you guys see these markets? What is this weird thing we're having where when the Dow goes up, the broader markets, the NASDAQ, S&P go down like crazy. Now today you got the NASDAQ and the S&P rocking, and you got the Dow down. It's just the weirdest thing ever. I got to say, man, it just keeps getting better and better with the nuttiness, man. It's like watching a show, not like reality. It's like watching a reality show, which everybody knows is not really reality, but crazy, crazy times. Okay, so let's talk about these markets today. We got a little bit of data. Consumer confidence report. Consumer confidence down very small from like 101.3 to 100.4. Most of the data in there was what was expected, so that was not in any way moving the market today. Consumers talking about they're not going to be buying. Bad news for car dealers. Consumers turned off on new cars. Not going to buy cars. Not going to be buying durable goods. But almost everybody that they polled plans on traveling this summer. So maybe I need to readjust my oil guess here, my oil analysis. Maybe the demand is going to be a little bit higher than I thought because even in tough times, people still going to travel apparently, overdoing other things. So maybe that's why oil's a little higher than I thought it would be right now. So yeah, consumer confidence. We had Fed yo-yos talking shit like always. We had Bowman out saying no cuts. We need. What was the quote here? We need rates to stay steady for some time, whatever the hell that means, to bring inflation down to target. Just not a lot of data today, so the market's kind of willy-nilly. So the Dow Jones falls 299 points, 39,112 on the Dow. At the same time, the NASDAQ jumps 220 points, 17,717 on the, that's what would a numerologist say about that? 17717, interesting. S&P up 21 today, 5469 on the S&P. No new records for NASDAQ and S&P, but getting close again. We're going to hear about daily records falling, I guess, right? Just a weird market, man. That just looks weird to me when the narrower market is down like that and the broader markets are up and vice versa. It just seems strange. The bond market today, laying low. Everybody knows what's happening on Friday with PCE. Everybody's waiting to see that number. All of the rest of this is the appetizer that prepares you for the main course, which will be that number on Friday. So the bond market today, nothing happening really. The 10-year down 1 basis point, sitting at 4.24%. The 2-year up 1 basis point today, 4.74%. A big nothing burger. The dollar today up a little bit, up 11 basis points on the index, 105.63 on the dollar index. So dollar gaining a little bit of strength, holding its own. Metals today, gold and silver, not good days, man. Gold falls $14.80, $2,338.50 for an ounce of gold. Silver down 71 cents, $28.80. I'm not liking the looks of this silver thing, guys. But it broke through 30. Remember, it was having trouble getting through 30. The resistance was there and it kept banging, but couldn't break through. And then it just like one day went from like 28 and change to 31 and change. Boom, and it just like ripped right through it. Well, now it's back down under 30, and it looks like we're in that same kind of pattern where it's having some difficulty breaking above 30. So we'll keep an eye on silver. Oil today falls 80 cents. $80.83 for a barrel of West Texas Intermediate, still well above the price range we see between 70 and 75. I'm going to get in there and jiggle some numbers around and see if I need to readjust that a little. Need to do a little more research on what actual demand is going to be like this summer. Well, we'll see where we go with that. Bitcoin today rallies up. It was down 58,000 and change. Now, boom, up today, up $1,978, now sitting back up $61,878, so just under 62 grand. Maybe there's the bounce. I thought it might go down a little further according to what I saw on the charts. I thought maybe it would get as low as 52 if it didn't bounce around 60. Looks like we're going to get the bounce. Let's see if we got any sustainability to it. All right, so let's talk about news you guys need today. Interesting stuff. You saw the headline. Does the United States actually have a debt limit? Is there a number where once we get that, it's like maxing your credit card out, so to speak, right? Or you're qualified for a $300,000 mortgage. You better not go to 310, because if you do, you're going to have to pay that 10 out of pocket. Does the U.S. have a limit like that? Well, guys, I'm starting to think we do. And I'm starting to think, sadly, that we are freaking almost there, man. Scary stuff. Listen to this. Remember back when Obama was the president? Of course, when we have a Democrat in the White House, the Republicans get super picky about deficits and debt. So they formed that commission, the big debt commission with Simpson and whoever the hell else was on it. And they made all these policy things, and they were scared the crap out of everybody. We all thought, oh my God, we're freaking doomed, right? Scaring us with inflation, scaring us with big interest rate hikes as the U.S. kind of goes crazy with debt. And guess what happened? Nothing. Inflation fell to like basically 0%. Interest rates never really rose, and they certainly didn't rise as a consequence of the U.S. debt, right? So guess what happens? Trump gets elected. Big policy move, cuts taxes. He's still a pretty good spender too, especially toward the end with the pandemic. Trump adds $8.4 trillion to the deficit, to the debt. Okay, that's new 10-year borrowing that happened under Trump. Now Biden's up to bat. Now Biden's not finished with his term yet, and he's had a little bit of restraint from the Congress, the Republicans in the Senate. Biden's up $4.3 trillion so far. Okay. Now, the way the CBO is saying these numbers, that's freaking $12 trillion in 7 years, guys. The CBO is saying the U.S. is expected to rack up another $22 trillion freaking dollars in debt over the next 10 years. Okay, now that'll put us pretty close to 50 freaking billion or trillion, fucking $50 trillion. And the interest, the money we have to pay on the debt, listen to this, guys. The interest on the debt will go from $892 billion, which we're going to pay this year, which to me is just freaking astounding. It is the number one thing now that our government spends money on. It's going to jump from 892 in 10 years. We'll be paying $1.7 trillion a year in interest on the debt. That's not paying principal down one red penny. And we all know what debt is, right, guys? We know what debt is. I've been advising you guys to get out of debt. I wish some politicians would be listening to the show, because these numbers are freaking astounding. Now, all of this assumes no new programs from anybody, okay? So no new programs. And this also assumes letting the Trump tax cuts expire. Okay. Now, what are the chances of either one of those things happening, guys? You think they're going to raise taxes and let the Trump cuts expire? Think so? You think the Democrats are going to cut spending, cut entitlements, cut Social Security? Listen to this. If they do extend the Trump tax cuts, add $4.6 trillion to that expected 20 over the next 10 years, up $1 trillion. The cost for Medicare over the next 10 years, as all the rest of the baby boomers start to finish retiring, up another $1 trillion. So now you're going, okay, an extra trillion on Medicare, an extra over the 10 years, I'm guessing. Trillion here, 1.7 trillion annually on the debt. Plus, that's assuming they're not borrowing and continuing to borrow after that. Guys, this is freaking lunacy, man. Who's going to be the one? Who's okay? Let's say that whoever wins the election this year, okay, whoever it is, you think either one of those guys is going to tackle this? The red team, the Republican team, they won't raise taxes. No taxes, no raising taxes. Matter of fact, they want to continue to cut taxes. The blue team wants to raise taxes, but they want to spend more. And they want to spend a lot more than they're going to raise in taxes. Neither party looking at the debt. Neither party looking at deficits. Neither party looking at interest payments and all the other freaking insanity we got going on here. So you got the red team won't cut taxes. The blue team won't cut entitlements. What else is there? Where are you going to cut? Where are you going to find the extra money? Guys, this is really, really, really bad news because I got a feeling these knuckleheads are going to continue to just stick their head in the sand, the ostrich method, until it just becomes a giant fireball like the one that killed the dinosaurs. I mean, it's just freaking nuts. They're not even talking about it. They're talking about spending more. They're talking about cutting taxes more. Guys, we're doomed. I hate to be Charlie negative. It's not what I do, you know that. But this is distressing because, I mean, even if you're taking an honest look at it like I do, okay, what are you really going to do to solve this, man? Are you going to cut Social Security, really? The contract people have paid into their whole lives? You're going to cut Medicare? You're going to cut health care for old people? What are you going to do? You're going to raise taxes? Really? On who? The rich? Okay, you take the rich people's money? But then what? What happens when that money runs out? And the way these knuckleheads are spending money, it wouldn't last but maybe a week. If they confiscated it all, it's nuts. So here we go. I don't want to sound like Charlie negative, but sooner or later, we need a hero. Somebody's got to show up with some stones to say, hey, we need to address this. And everybody's going to have to get ready because addressing this will be painful to everyone in the freaking country. There's going to be no escape in the pain of this. Now, granted, we've had a good run, right? We've been running this debt up since the 80s. So we've had 40, 45 years or so of running up the debt because we started with, when Reagan was president, we were under $1 billion freaking dollars in debt. And they thought that was outrageous. And now, in 44 years later, here we stand at, what are we, 36, 37 trillion? And with 22 trillion more on the books, plus 4.6 trillion, plus whatever the freaking Democrats who said they want to spend, giving away free stuff to people. And that brings me the easy segue here to Larry Summers. I got to admit, I did not really care for him so much when he was in the government, but I like some of the analysis he's been making now that he's in the private sector. So Summers lets him have it today, both the Federal Reserve and the Democrat Party, leaving the Republicans off today, which was, thank you, Larry. He said the Federal Reserve is way too optimistic about inflation. He said the only reason the numbers are coming down is because of the post-pandemic and everything's getting straightened out in business, and that it's not really interest rates. He does not believe that interest rates are even remotely high enough to beat inflation down. He expects inflation to come back. He also said the Democrats, I love this line, he said they believe in free lunch economic propositions. Basically explaining that if you take a government and you spend money, government investment, everything's always going to pay for itself, right? That's why we're going to be 50 friggin' trillion dollars in debt. So he was explaining that spending more doesn't pay for itself, cutting taxes doesn't pay for itself, right? And he said that he blames Biden, of course, because he's a big program guy. He put all of this stuff in, and there was never any discussion about how to pay for it. Because guess what? It's going to pay for itself. Okay. He also says the Fed is badly wrong that 2.5% is the neutral rate. That's the Fed's target to lower the Fed funds rate from 5.35 today. The target, what they feel is a neutral rate, a rate that doesn't promote inflation or deflation, right? 2.5. Summers says they're freaking nuts and dreaming. He says more like 4.5. Now, this guy's been right, whether you like him or not. He's been pretty accurate over the last few of his analysis. And he said government overspending is going to support demand in this economy, which probably is true, right? And he said that it's going to put pressure on prices because unemployment is not falling either. So he said that even if the Fed cuts rates, don't expect rates to come down much from where they are, 5.35 to maybe what he says is a neutral rate of 4.5. Crazy stuff, guys. Crazy, crazy, crazy stuff. To end it on something a little different. There's a big, do you guys see the new word? They said the economy is good, but everybody's pissed off about it. So what they're calling this now, they have a new phrase for it. Get this, the vibe session. It's not a recession. It's a vibe session. These are new economic words I'm not familiar with, but that was an interesting one. But the news everybody was talking about today on social media I thought was interesting. Walmart, biggest retailer in the world, they have their great savings and they have their big signs about everyday low prices, and they have the price, right? And they're all over the place, big signs, banners, and paper. Well, now Walmart's changing all of that to digital pricing. Digital. So what they're saying is that's going to set Walmart up where they can do this surge pricing, right? So, okay, it's 110 degrees out like it is in freaking Vegas. Guess what? Cold drinks, beer, ice cream, all of that stuff goes up during the heat of the day. Now, we'll see Walmart's denying it. Oh, no, that's not what we have in mind. Blah, 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 blah. Then why are you changing it? Why are you spending all that money to change it if you don't plan on profiting from it? Then don't give me the bullshit about a better customer experience, because we know that's never the truth. But anyway, another crazy day on Wall Street and in the wonderful United States of America. As always, guys, I give you my real sincerest thanks, especially the guys staying here till the end of the show, right? A lot of people sign on, don't hang for the whole show. For you guys still here, much, much, much appreciation. I'll be back tomorrow to bring you guys the news you need. We're moving toward PCE Day, so we'll see where that leads. We'll see what happens the rest of this week. It's freaking mania time. Anyway, guys, hit that like. There you go, Mr. T. Hit that thumbs up, guys. Changes the algorithms around. Really could help the channel. Appreciate the support. Anyway, that's it for the day, guys. We'll see you again tomorrow. Until then, everybody, take care. Thanks.